Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of July the 2nd, 2018. Now, just a quick reminder for everybody, we still do have a few open spots left for our live seminar in Tampa in September 2018. Please feel free to contact VantagePoint if you would like to get in on a seat. I would like to see and meet everybody there. So from there, guys, let's get started in our weekly outlook. We're going to begin where we always do with that all-important US dollar index. Now, looking at the dollar index from last week, guys, we can see a very repetitive pattern here where essentially the dollar index is capping out just above the 95 level, and it continues to use the VantagePoint key long-term pivot area at 94.23 as a pivot area to move higher. Now, our major event risk coming up this week, of course, we have a holiday short week with Canada Day, obviously in Canada, and we have July the 4th in the US. So we're going to have a holiday thin market on Monday and Wednesday. And of course, the event risk is that non-farm payroll. So it's going to be a very choppy, volatile week. Now, the dollar usually holds its ground going into that payroll number. The GDP a little bit soft, but overall the unemployment rate, I think will support the dollar to some degree. But, unless we can break through this 95 area and make a clean break here, then the dollar is still likely to come under pressure. But its main counterpart, which of course is gold, has basically had a pretty big move from 1310, all the way down, where we've started to bottom out to some degree here, down around the low around 1247. But again, gold's still looking rather bearish, but we do see with VantagePoint our neural index is up. Predicted differences are starting to rise. So maybe we'll see gold start to turn around next week, but it will be determined by that all-important payroll number. Now with oil continues to move aggressively higher, and once again we were doing oil contracts live in the April seminar in Tampa, buying down in that 64 area. Fantastic. I think we were even below 64, the 64 area. But again, oil remains very well supported going into summer driving season. But you can see the medium term trying to cross the long-term predicted difference, suggesting we could get a corrective move. Now, the further we move away from the key VantagePoint long-term pivot area at 68.75, the more likely it is we're going to retrace to it. So try and keep that in mind. But for now, there is certainly demand for oil going forward. Now, our stock have started to stall out here. Again, we've hit a low for the week, coming in at the 26.93 area. We're starting to rebound, but you can see that we've come up on Friday, kissed that long-term pivot area, 27.45, and again another failure. And I'll point out here, guys, we had 3 failures like that last week where we banged into that key VantagePoint level only to sell off. So equity's still looking very soft here. Now, going into our main currencies for next week, Euro US, again, we're trapped in the same range here, guys, 115. The immediate resistance zone is coming in right around 117.20, and then we have it again coming in at about the 118.51 area, but we're looking for a break. Now, in my respectful opinion, that break will not come until after the non-farm payroll number. The euro is starting actually to show a little bit of upward momentum. Now, bear in mind, this is Friday, and we are going into a holiday thin week, so we're going to see profit taking because this particular pair was unable to break down below 115. So obviously the sellers get nervous down there, and that sends the pair higher. So we can't rule out a move back towards that 118 area, but I don't think we're going to see that until we get that all-important non-farm payroll number. Now, US Swiss franc, again, you can see a very well-defined resistance zone that I've got up here just below the parity level. We're failing there again. Now, I will point out here, guys, that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So we've had 13 failures here, guys. 13 14 of them at this 99.90 level. So it's very difficult to make a bullish argument for this particular pair. And this pair, like dollar yen, is a leading indicator for the stocks. And this tells me that unless this particular pair can break through the parity level above 1.006, then not only is this pair in trouble, but so is the S&P 500. So keep that in mind. But this pair, you know, it does follow Euro-US. Euro-US higher, this pair lower. So that's one more bullet in the chamber for the Euro bulls here, in my respectful opinion. Now, as we look at pound dollar for going into next week, carries a very clear bullish tone to it. Now, when we go back here and we look at this on a year-over-year basis, this is why it's very important to come back and look at these areas. Going back into the November lows, November 2017 lows, we can see that the market, order flow traders are watching this area and they're aggressively buying above 130. We continue to do that as long as 130 holds here, and again, a very strong move off of that area. But we still have to contend with that key vantage point pivot area at 132.49. Once we break above that, and more importantly, once we break above 133.20, if we break above 133.20, then and only then will we see the pressure come off the downside, and this particular pair can move. Right now, VantagePoint is forecasting further gains for the British pound this week. Now, with dollar yen, we're in a very known congested resistance zone here around 110.80, but an even bigger resistance zone in the 111.40 with a clear downside bias. Now, we have a fresh triple EMA cross from VantagePoint. The dollar yen is often bullish going into the payroll number, and then 9 times out of 10 it reverses. But this is a stock trade here, guys. So very mixed between US Swiss franc and dollar yen, but in my respectful opinion, again, unless we can break above 111.50 and stay above this level, then basically this move higher is corrective in nature, and we are likely going to turn around by late week, mid to late week. But right now there is a bullish sign here, absolutely. Medium term crossing the long term predicted difference. We've got an RSI that's showing upward momentum and a fresh triple EMA cross. But the downside pivot area here from the VantagePoint side is 110.22. As long as we stay above 110.22, we can potentially go higher. But if we slip back below this level, all longs should be removed and we target back into that lower 109 area. Now, as we come into our 3 main commodity currencies, I've been a strong advocate for the Canadian dollar, despite the absolute horrific data coming out of Canada. And it just shows how irrelevant this economic data really can be at certain times. And it's nothing but noise here. Basically, oil rallies every time, guys. In May, June, July, and August, there's demand for oil, then there's going to be demand for Canadian dollars. And you can see we've put a strong double top in here. And again, when we back it out a little bit, so we can all see this when we're going back out even to up to a year ago. Once again, you've got to make sure that you're going back far enough that you can see these levels. And again, this looks to be a retracement in the broader, basically in the broader downtrend here from a longer term perspective. So when I'm looking at this right now, predicted differences are down. We've got a fresh crossover on the predicted MACD. We've slammed through the 40 level on the RSI. Basically, we should continue to move lower on this pair, but there is still a trade war going on here, guys, so we can't forget about that. So shorts carry the edge while below 134, but if we break above 134, all bets are off on shorts, guys. You want to cut those fairly quickly only if we break above 134. With Aussie US next week, we've got a corrective move higher, but Aussie is very correlated to the equity markets. So if the S&P goes lower, Aussie US goes lower, but it looks like there's a bit of life left in both. But I will point out that both are corrective in nature. 74.36 is the big level that we need to break above next week. If we can break above that key vantage point level, then we may be able to target back towards the 77. But my optimism on that, based around the equity markets, remains heavily guarded. Now, with New Zealand US, basically an Aussie US trade here, guys, what we want to watch very closely is the 67.50 area. If we can hold above this, we should be able to move towards 68.90 pre-non-farm payroll. But again, very major event risk this week. Holiday thin, choppy markets. We've moved into summer trading. So be very, very cautious to start the week here, and be very careful midweek until at least we get that ADP report. So with that said, this is the Forex Weekly Outlook for the week of July the 2nd, 2018.